Welcome back to the Deep Dive. This is where we cut through all that market noise and really pull out the key insights you actually need.
Exactly, tailored just for you.
Today, we're going beyond just the headlines. We're diving deep into what happened in the Indian market on June 25th. And, maybe more importantly, setting you up for June 26th. Okay, let's unpack this.
Sounds good.
So our mission today, break down the Nifty 50 and Bank Nifty performance. Then get into that fascinating push and pull between the FIIs and DIIs, the foreign and domestic institutions. Their moves often tell a deeper story, right?
Absolutely, they really do.
And finally, we'll look ahead. We'll use technical tools, specifically Fibonacci levels, to map out those crucial support and resistance zones for tomorrow. The goal, to help you see past the daily ups and downs and really grasp what's driving things.
And what's truly fascinating here, I think, is how we connect yesterday's hard data, the actual trades, the closing prices, with these, predictive tools for tomorrow.
Right.
Understanding these specifics, the open, the close, the feedy flow, those technical levels, it's not just about knowing facts. It's about gaining a bit of a strategic edge, wouldn't you say?
Absolutely.
Helps you interpret the signals, maybe anticipate shifts, make more informed calls. Whether you're deep in the markets or just want to understand the economy better, that's what this deep dive aims for. Clarity.
Perfect way to frame it.
Yeah.
So let's dive right into the story from yesterday, June 25th. Starting with the big one, the Nifty 50. It really set the mood.
Okay.
Our data, mostly from moneycontrol.com, shows Nifty opened at 25,150. Then it climbed pretty steadily, actually. Touched a high of 25,267. And the close was very strong. 25,244.75. That's a solid gain of 200 points, just over 200 points, or 0.8% up for the day.
That's quite a move, 0.8%.
Yep. Now, switching over to the banks, the Bank Nifty, it also finished positive. Closed at 56,621.15. So that's a gain of about 159 points, or 0.28%.
Okay, a bit more modest compared to Nifty, but still green.
Right. The source didn't explicitly give the open or intraday high for Bank Nifty yesterday, but that positive close definitely adds to the bullish picture. So when you see both key indices closing up, especially Nifty with that kind of strength, what's that telling you about the sentiment, the conviction?
Well, that's the crucial question, isn't it? If we connect this to the bigger picture, Nifty closing near a 9-month high, that's significant. It screams strong bullish momentum.
Right.
It tells us buyers weren't just showing up. They were sticking around, absorbing selling, and really pushing prices up into the close. That suggests growing confidence, people feeling the trend is up.
Makes sense.
And, something else supports this. The India VIX, the volatility index, the fear gauge, some call it. It closed around 13.10. That was down about 4% on the day, again, per money control. It's like the market's taking a calmer breath.
Lower VIX, less fear.
Exactly. Calming volatility generally helps steady trends. It provides a supportive background for prices to keep climbing.
Okay, so Nifty's up strongly, Bank Nifty's up, VIX is down. Looks like a clear bullish signal on the surface.
Seems that way.
But here's where it gets really interesting, I think. This is where you often find the real story. Who was actually doing the buying and selling? The big players. FIIs, foreign institutional investors, DIIs, domestic institutional investors.
It's institutional flows, crucial.
Their activity is key because they move huge sums, and their actions can show the real conviction, or maybe the lack of it, behind the market moves. So let's peel back that layer. Looking at the cash market data for June 25th, again from moneycontrol.com.
Let's see it.
FIIs, gross buy was 13,260 crores.
Okay.
But their gross sell was higher, 15,688 crores, leading to a net sell of 2,427 crores. Quite a bit of selling there from the FIIs.
Okay, noted.
Now the other side, DIIs, gross buy, 12,810 crores gross sell, 10,437 crores. That gives them a net buy of plus 2,372 crores.
Wow, look at those numbers side by side.
It's almost a perfect mirror image, isn't it? FIIs, net sellers, DIIs, net buyers, almost to the exact same tune.
Remarkable.
And adding another piece to the puzzle, the overall market health. The advanced decline ratio for yesterday, for Nifty, 41 stocks up, only 9 down.
That's very strong breadth.
Very strong. And for Bank Nifty, 9 advances, 3 declines. So despite the FII selling, the market internals look pretty robust. What's the real story here?
This raises a really important question, doesn't it, about the underlying dynamics. What's fascinating here, and this might be the key takeaway for the day, it's not just that FIIs sold and DIIs bought. It's the implication of that near-perfect offset.
Go on.
It suggests what we often call institutional reallocation. Think of it like a handover.
Okay.
Foreign institutions might be selling, maybe taking profits, maybe rebalancing globally, who knows? But domestic institutions are right there, stepping in, seeing value, and absorbing that selling completely.
So not necessarily a sign of weakness then.
Exactly. It's not like everyone's heading for the exits. It's more like a shift in ownership, showing strong domestic confidence. That internal strength, that resilience against foreign outflows, is actually a very positive sign for the Indian market.
That makes a lot of sense. And the advance decline ratio.
Right. That strong AD ratio you mentioned, 41-9 in Nifty, 9-3 in Bank Nifty, that tells us the market breadth was incredibly healthy. The rally wasn't just a few heavyweights pulling the index up.
The strength was widespread.
Precisely. Broad participation across many stocks. That really underpins the market's resilience and makes this uptrend feel, well, more sustainable.
Okay, so we've unpacked yesterday's action, the institutional flow. Now, the big question. What does this mean for you heading into tomorrow, June 26th? We've looked back, now let's look forward.
You gotta look.
And for that, we often turn to technical analysis. A common tool here is Fibonacci levels. Now, these aren't magic numbers, but they are based on a mathematical sequence, and traders use them a lot to spot potential support and resistance zones, places where price might pause or even reverse.
Key levels to watch.
Let's start with Nifty 50, closed yesterday at 25,244.75. Based on the analysis from Money Control, the key support area to watch is between roughly 25,000 and euro 25,100.
Okay, 25,000 to 25,100.
Yeah, apparently those levels line up with the 50% and 61.8% retracements from a recent move. Those are classic Fibonacci levels that often attract buyers.
The golden ratio zone is in there.
Exactly. Now, on the upside, for resistance, the immediate zone to watch is 25,300 to 25,350. That's near yesterday's high and also lines up with an upper Fibonacci zone.
So the first hurdle.
Right. And if Nifty pushes through that, the next resistance area is seen further up, maybe around 25,450 to 25,600.
Got it. Maybe just quickly explain what support and resistance mean in simple terms for listeners.
Good point.
So support is basically like a price floor. It's a level where you'd expect buyers to step in and prevent the price from falling much further.
A safety net, kind of?
Sort of. And resistance is the opposite, like a ceiling. It's a level where sellers might emerge, making it harder for the price to go higher. So these Fibonacci levels give you a kind of map of potential floors and ceilings.
Great explanation. Crucial decision points.
Definitely. Now, turning to Bank Nifty.
Right, Bank Nifty. The technical guidance from the previous day, June 24th, is still considered relevant for tomorrow's session.
Okay.
For Bank Nifty, the key support zone is identified between 56,200 and 56,300. Again, that's based on a 50% to 61.8% retracement of its recent range.
Same logic as Nifty support.
Yep. And looking higher, for resistance, the big level to watch is 57,000.
Ah, the round number.
Exactly. It's a key psychological level. Those big round numbers often act as magnets or barriers. And it's also near the next significant swing high. So these levels for both indices are really important markers for everyone, whether you're trading short-term or just tracking the market structure.
They give you checkpoints, basically, to see how the market behaves when it reaches them.
Precisely. So putting it all together now, we have low volatility, this interesting institutional handover, strong market breadth. What kind of picture does this paint for June 26th? It feels like quiet confidence.
That seems fair. The low VIX, around 13, certainly suggests a calm backdrop, which usually favors steady moves.
And the DII is absorbing the FII selling.
That points to internal resilience, not panic, right? It suggests domestic players are confident enough to buy what foreigners are selling, and the strong AD ratios back that up. The strength is broad-based.
So summarizing the technical view for tomorrow, June 26th. For Nifty, support around 25,100. Keep an eye on resistance between 25,300 and 25,350.
Yeah.
And for Bank Nifty, support around 56,200 with that key 57,000 level as the resistance target.
Exactly. So the potential, let's say, trade setup or scenario based on all this is kind of straightforward.
All right.
If prices pull back towards those support zones, 25,100 for Nifty, 56,200 for Bank Nifty, and fine buying interest, a bounce from there could push them back up towards those resistance levels we mentioned.
Makes sense. Bounce off the floor towards the ceiling.
Right. Now, if we see a decisive break above those resistance levels, Nifty clearing 25,350, Bank Nifty getting through 57,000, with conviction that could signal the rally has more legs, potentially extending higher.
And the flip side?
The flip side is always important. If those support levels don't hold, if the market breaks down through 25,100 or 56,200, that could trigger a deeper pullback. likely towards the next lower Fibonacci support levels.
Okay.
Understanding these possibilities, these scenarios, is really why this stuff matters for you, the listener. It helps you interpret the daily news flow with more context, beyond just the headlines. It gives you a framework.
Absolutely. A proactive perspective. And there you have it. We've taken that deep dive into Nifty and Bank Nifty's recent action, deciphered the crucial Fiddy dance, and mapped out those key Fibonacci levels for tomorrow.
Covered the key bases.
Hopefully you now have a clearer picture of the numbers, the institutional undercurrents, and the technical roadmap. Thanks so much for joining us on this deep dive.
And just one final thought to leave you with, something to maybe chew on.
Go for it.
Given how strongly the DIIs stepped up to absorb FII selling yesterday, what happens if that pattern continues? If FIIs keep selling but DIIs keep buying day after day, what does that signal about the long-term trend?
Interesting question.
And what are the bigger implications of this growing domestic strength versus foreign outflows? Is it a temporary thing, or maybe a sign of a more permanent structural shift in the Indian market's dynamics? Something to think about. Keep asking questions, keep digging deeper, stay curious.